Credit and finance for MSMEs. The growing focus among lenders on cash flow-based credit has come in the backdrop of the Reserve Bank of India's (RBI) suggestion towards adopting cash flow-based lending instead of balance sheet-based. The credit gap in the MSME sector is massive, roughly Rs 22-25 lakh crore, according to a June 2019 report by the UK Sinha Committee constituted by the Reserve Bank of India (RBI). That's equivalent to at least Pakistan's gross domestic product (GDP) of 20.08 lakh rupees $262.61 billion in 2020, as per data from the World Bank. The reason for the enormous credit gap is twofold: 1. Lack of assets among MSMEs such as land and building edge; 2. Secure asset-based financing or secured loans; and 2. Challenges faced by financial institutions in credit risk assessment owing to lack of financial data and credit history among small businesses. As a result, lenders over the past few years have started to acknowledge the cash flow-based approach to disperse credit to MSMEs through alternative data sources such as UPI transactions, income tax returns, GST returns, bank statements, CIBIL score, point-of-sale data, and more. The loan amount generally ranges from 20,000 rupees or less to 2 to 3 crore. Cash flow-based loans are generally working capital loans required for short-term to manage operational expenses in a business such as rent, salaries, administrative expenses, business travel, raw material purchase, and more. Buy now, pay later, invoice-based financing, supply chain financing, co-lending, are some of the collateral-free credit options for small borrowers depending upon their requirements and based on the cash flow data of their businesses. The growing focus among lenders on cash flow-based credit has come in the backdrop of the RBI's suggestion towards adopting cash flow-based lending instead of balance sheet-based. To improve the credit-to-gross domestic product ratio, access to credit and cost of credit need to be addressed by lesser reliance on collateral security and greater cash flow-based lending, the RBI Governor Shaktikanta Das had said at a webinar on investor education organized by National Council of Applied Economic Research in December 2020. However, cash flow lending's share in the overall lending that both banks and NBFCs do together is currently very minuscule, as it requires a lot more discipline on the part of the lender, while even closer monitoring of cash flows of the unit is required for lending. Ajay Srinivasan, Director, CRISIL Research, had said at the SME Artha event organized by Financial Express in November last year. This commensurately means that operating expenses, OPEX, at least initially as the firm gets established, remain on the higher side, Srinivasan had said.